You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. It won't be bi-weekly. We'll be just the one show this week, unfortunately. Of course, fortunately, here in the States and, of course, around the world, we have the holiday season upon us. So Thursday is a big holiday, so we won't be recording a second show this week. So we'll kind of try to pack all of that goodness into one show this week, listeners. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-interesting Options Insider Radio Network. You guys know the drill. 13 different programs for you to choose from, including nearly 400 archived episodes of this here Option Block available wherever you find your finer podcast programs, iTunes, Stitcher, Aha Mobile, our flagship site, theoptionsinsider.com, wherever you like to find audio, we're available there. Or you can just check out our mobile app, available for iOS, Android, and the Fire OS. No shortage of ways for you guys to listen to our stuff and to interact with it, to give us your questions, your comments, your feedback, because we love to hear from you guys. It's one of the reasons we do these shows. And joining me on the old program today, first off, welcoming him back from his global odyssey to the south. He is now rested and tanned and mercifully free of any gastrointestinal issues. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back from your southern sojourn, sir.
Always good to be back here to the mountainous metropolis we all know and love as St. Charles, Illinois.
Yes, the megalith, the mega metropolis, full of many, many high elevations. That is St. Charles, Illinois. And listeners, if you do go there, you may be a little disappointed, but it's still a fun place to visit. And also joining us, beaming in from the great Options Express by Charles Schwab HQ. You know him, you love him as the Viceroy, Mr. Alex Jacobson from OX. Mr. Viceroy, welcome back to the program, sir.
Good to be here, and still watching the screen for 18,000 on the Dow and 2,100 on the S&P. I think we could hit those this week.
Always good to have something to root for on slow holiday weeks like this, Mr. Viceroy. And last but certainly not least, rounding out our panel of odd lots today is the Rock Lobster himself, Mr. Andrew Giovinazzi, who does a little UA activity for us here on the old site. And when he's not busy doing that, he's over there helping all you mentees and clients over there at OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir.
It's good to be here. Always good to be back on the Option Insider Radio Network. I seem to be contributing a lot of time on this said network somehow. Somehow, some way.
Somehow, some way. This week, a little less, so you get to have a nice little break.
Woo! Woo! Vacation.
Get to eat your lobster. You get to clean the barnacles, whatever you folks do up there in Maine this time of year.
Just stare at the ceiling for a couple hours. It's been a good year, but a busy year. So, but I just need some ceiling staring time.
That sounds very exciting. Well, before you move into that very exciting phase of your day, I think we all will collectively keep on moving right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you know the deal. This is, of course, the portion of the program where we break down what was moving, what was lighting up the old tape, what was making headlines today in the broad markets. And as Alex alluded to, we're kind of flirting with some highs, but we're not really lightening up the old tape. Certainly not the way we were last week. We are recording this, of course, Monday, December 22nd, for all of you playing the home game listeners. And last week, of course, was a very rock'em sock'em week. A lot of big movement in the averages, a lot of vol being exhibited in the broad marketplaces. This week, at least so far, with one session under our belts, not so much. Can't say that's really too much of a surprise, since it is a truncated holiday week, and a lot of the big people, big players, big traders have already left for hither and yon and have their big holiday plans have already started. So I wouldn't expect to see too much going on this week, and also probably some thin markets, some light volume. We certainly saw that today in the S&P. Big products like the SPX been averaging about close to 1.1 million, I should say, contracts a day, doing just under 700,000 today. So a light day, pretty much a light day across the board for most of the major products you're going to watch out there today. Same story pretty much for SPY obviously being a much smaller contract, averaging nearly 3 million contracts a day, about 2.9, doing about 1.6 million today. So fairly light volume. Most of the major indices up slightly on the day, about a third of a percentage point or so across most of the major indices. And VIX cash taking it on the chin already today, down 1.25 points to 15.2, perhaps reflecting the fact that not a lot of people really looking forward to much for the rest of this week, and so they're taking their holiday, their weekend out now, perhaps even starting as soon as Monday. Uncle Mike, it's been a while since you've done this. Hopefully you remember how it goes, but since you've been gone for a while, I'll toss it to you first. What caught your eye in this first session back from your extended Southern holiday, sir?
Well, I'll tell you, the first thing that caught my eye is being in Mexico. I noticed that how strong the dollar was. Normally, it's if something is 100 pesos, it means it's about $10 in U.S. from the last time I've been there. But now it means that instead of like a 10-to-1 ratio, it's a 14-to-1 ratio. So God bless the U.S. dollar, because that made this past vacation a lot cheaper than it has been in years past. So the weakening peso is the first thing that caught my eye last week, and the strengthening dollar. But the other things that really caught my eye was just the sea of nothingness, so to speak. Gilead had a big down day today. I don't really have any large positions in Gilead, but that had a down day today, some fairly decent significance. Walmart actually came up a little bit today, up 1.43%. We had sold some puts on it at the 85 level a couple weeks ago, and it got put to us, and then now it's come back a little bit, so we sold some covered calls against it. IBM was up close to 3% on the day. So the main thing that I'm noticing as to what's happening today would be the blue chips. And of course, last week we had the rallies in the market as a whole, and then a lot of the oil stocks coming back. So a lot going on. It's just not a lot today.
Yeah, a lot in the macro sense, but not a lot, you're right, really moving the needle for the rest of this week. Certainly seems like the market is reflecting that. Mr. Alex, what, if anything, really caught your eye out there in today's activity, sir?
Well, the big theme here continues to be the oil trade. But when I reached out to the desk today, they said we were doing a lot of Taser today. Taser was up about 8%. And a name that I actually had to look up, Ambarella, which is a semiconductor company. But there were a couple other themes today. Facebook over 81. And so a lot of traffic there on both sides, both put selling, some people playing it from the long side on the call side, and Priceline, which of course, periodically sparks a lot of the what I'll call the little out of the money premium buyers. Priceline moving almost 40 handles today. That got a little activity behind it. Amazon bucking the trend, seasonality. Amazon, my recollection is, normally does not do well in the Christmas season with expectations about earnings and how much they're selling. Amazon moving up about 7 handles today. So there was lots of stuff to trade, but to Mike's point, the averages, the macro stuff kind of dominated the news today, but it wasn't a powerful trading day. It was a relatively quiet trading day overall.
Yeah, I'm looking there, and you also mentioned crude. Doesn't surprise me, considering that we saw continued developments out there on the crude front. We saw the Saudis coming in and yet again pretty much essentially saying, yeah, we're not really going to support these levels. We're not going to step in, do any sort of drastic production decreases to support prices here. So yet again, looks like crude taking it on the chin. NYMEX, the light sweet, giving up about 3%. We have the Brent over there on ice hovering right around $60 a barrel. So still weighing to the downside. Big houses like Barclays and other coming out now saying, yeah, we could go lower from here. So it seems like the consensus in the near term may be that we're heading south before we head north again, despite the fact that we have seen a pronounced increase in upside specs, as we mentioned on the Vol Views program and on this program last week. Of course, the increasing number of commitments from traders on the futures and on the options. Not surprisingly, when you get the stocks down, or the index, the product is down over 30 handles in some variations of it. Not surprising, you're going to get some upside interest. But still interesting stuff going on out there nonetheless. All right. And Mr. Andrew, what are you watching out here? What caught your eye in today's activity?
Well, I was just, Taser came up. We have a client that's been long it for a while, and she scolded us because she told us about it in October. Now it's like $20 higher or something. So, no, Taser, I think there's going to be big demand for. I think there's some speculation about a federally mandated, you could have a federally mandated non-lethal subduing device. And I guess that's what a Taser is. So there could be big sales for Taser. I think that's possible. I think that's some of the spec. Vol hasn't jumped in there huge, but stock sure has. So what else are we watching? We're watching volatility drop. We're watching the S&P 500 continue to rally. We're even watching, I think, this is also the time of the year that I think stocks that have had a hard year, there's some tax loss selling in some of those, but it seems like they're doing okay. So I don't know. All I can say is I don't think I want to be short this till the end of the year. It doesn't make a whole lot of sense.
No, not with all. There's some literal headline risk out in this name. I remember last time they moved, really, it was off the strength of those wearable cameras that they were selling. It wasn't anything as dire as, the other products that they usually sell in the headlines. It was just more of keeping the cops in line and having more of a record of what they do. Maybe this movement is a result of that, or maybe it's more demand for the Taser core product. I don't know. Could be a combination of both. Either way, yeah, it is probably a grim reflection of our times more than anything else. All right, and before we move on into any more grim topics, we're going to keep on rolling with perhaps maybe some a little bit lighter hearted or perhaps darker. We'll see what we find when we move on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know it, you love it, you know what time it is. It's time for the old Odd Block, the portion of the show where we break down the weird, the wild, the wondrous, the sometimes just downright bizarre paper that we're seeing lighten up the old options markets today. Going to kick things off with going back to the old energy realm with Cobalt International Energy, ticker symbol CIE. This is going to be our representative cheapy name of the day, though perhaps not as cheap as some of the other ones we might profile here on this segment. This one closing today, $8.91, down about 5% or about 50 cents on the day here. And this is the name that does not bad volume, given all the other names we talk about here on this segment. This one does about 4,000 contracts a day. Actually doing less than that today, doing about 2,600. So it wasn't an overall volume play that caught our eye out here as much as it was a single trade. And we're going to move our attention out here to the Jan 10 calls. That's what pretty much caught our eye, and that also is what made up for the lion's share of the volume going up in CIE today. When we started profiling these this morning, we saw paper coming in and buying them. We picked up a large block of 871 of these 10 calls going up, paper buying for 30 cents. As the day went on, we saw about 2x that come into the total of nearly 1,600 on the day. Also, a 500 lot of the Jan 9 puts going up as well. So maybe there's a wee bit of a ratio there. Didn't see any stock with it, and it seemed like all the rest of that paper was all buying as well. Open interest, only 750 contracts. So clearly open in paper going up on this strike. This is interesting because this is, as you might see, very, very near term. Slightly out of the money paper here. Didn't see any stock going up with it. So it looks like it is, as it appears to be on the surface, someone making a very near term, highly speculative upside bet here on Cobalt. Going to turn it around here in the near term. Looking at a chart here, a 6-month chart here of Cobalt. This may not be the most outlandish bet I've seen here in the odd block this year. Certainly we've seen some crazier ones. Cobalt was flirting north of the 10 handle back in late November, as recently as that. So it hasn't been that long ago, about a month ago or so, when we saw this name north of 10. It got into the 11 handle range, then it kind of just gapped down right around the end of November and hasn't looked back. So this guy obviously clearly feeling that this name has some better days ahead of it, maybe going back to the halcyon days of September when it was trading nearly $16. So not that long ago, this name was doing fairly well. This guy obviously feeling that this near-term sell-off a bit overblown. Mr. Rock Lobster, what's your take on our friend here rolling the dice near-term on some upside in Cobalt?
Guys, we've seen some other call buyers. I profiled some at the end of last week as well, but they were farther out in the cycle, farther out cycles. This is pretty, there's so much volatility in the space right now. It could happen, but it just seems expensive to me. I don't know. I know 30 cents doesn't seem like a lot, but it is. They are $2. They are out of the money a bit, and they're looking for a bounce. This is a pure, these stocks have been crushed. They started to bounce a little bit. There was a pullback, and somebody's buying some cheap calls through January, and they're looking to make some dough on a quick rebound. If we get the rebound. Just saying. No guarantees, but that's what they're doing. Just looking for pure upside here.
All right. Next up, listeners, we have, for the old odd block segment, U.S. Bancorp, ticker symbol USB, a well-known port that we all use every day. Also, for your stock trading pleasure, closing here today, $45.64, up about 1%, or about 44 cents on the day. And this is a name that does fairly decent volume, as you might imagine, about 7,000 contracts a day, doing about nearly 13,000 today. So fairly robust paper. And what caught our eye actually out here as I pull it up for you was in the Jan expiration cycle. We pulled up and saw on the site this morning a pretty decent chunk of the Jan 45 halves. When we started profiling them this morning, well, we pretty much saw a massive block of 3,645 going up, pretty much one big chunk right on or around the offer. So clearly buying activity. As the day went on, a total of 4,477 going up on this strike, all opening. How do we know that? Well, because there's zero open interest on this strike, not one single contract. So all of this clearly opening paper. Kind of a similar refrain to what we were just talking about with our last name there. Doesn't look like any stock went up. Doesn't look like there's anything else really conflicting with this. Looks like it is pretty much what it appears to be on the surface. Someone taking down some sizable, and this is pretty much at the money right now. These are at the money calls. Stock, I said, trading or closing today, $45.64. So interesting one to watch. There is a divvy coming up on the 29th, so that's something to be aware of out here, but it doesn't look like this is anything to do with a standard div play, nor would you see one this early for something along those lines. So some interesting paper and perhaps a little bit of a head scratcher. Clearly, someone wants some room to run here in good old USB. Mr. Rock Lobster, what's your take on our friend opening all of those 4,477 contracts here in U.S. Bancorp?
I think they're buying. They were right. Already they're about a dime to the good on these ones. And it is the cheapest volatility of any calls options I saw today. 12 all for these at the money calls with a month to go.
A bargain.
Realize vol in the name over the last 10 days is 24. So they're not very expensive. Not at all. So they just super cheap options, essentially. And, the financials have been moving, and it looks like they got a good shot to make some money on these.
Yeah, definitely.
Cheap.
When you're buying things dramatically cheaper than real near-term realized vol, not a bad scoop. All things considered, you can probably get away with that a little bit, I think, and have some room to run.
They get a 9 out of 10 on the savvy scale.
There we go. So yeah, so far we're 2 for 2 here on our upside call buy-in frenzy. Let's see if we can make it a trifecta as we move on into our third name / victim here in the old odd block. This is the name you guys may be familiar with. I know a lot of you clients over there at OX love to trade this one. This is indeed good old Alibaba. Ticker symbol BABA, closing today 108.77, down nearly $2 or nearly 2% on the day. As you might imagine, this is a fairly robust name, doing about 182,000 contracts a day. And like the rest of the market, doing a little bit less than that today, doing about 114,000. So it wasn't overall volume that caught our eye. It was indeed one particular trade among many. There's quite a few trades to pick from out here in Baba land. But what caught our eye out here was actually the Jan 120s going up quite a bit here. Let me pull up the exact strike. Here we go. Going up just a hair shy of 10,000 times, 9,890 times to be exact for paper buy-in. We first noticed this activity this morning on the site when we highlighted a block of 6,299 of these calls going up for 95 cents. It went up in one block, like we said, tied to stock with 100,000 shares. So this guy's looking obviously get long. Can't really say vol because this is near-term stuff, more gamma. A little bit of vol, but mostly gamma here. So he's looking to get long some of that. As the day went on, obviously they piled in to more of these calls to the tune of nearly 2x, right? About 10,000 contracts or so going up on those. I don't have the exact details on those if they actually did more stock with that. We'll have to parse a little bit. So Mr. Rock Lobster, what's your take here? Take us home on this pretty much upside frenzy here today in the odd block, and in particular, this upside love here for Baba. First off, did you see more stock going up with the latter portion of those calls, or are they pretty much untied?
Yeah, I thought they were. It looked like it was around the same time, and it's it's like it looks like a duck and smells like a duck. It's a duck. There's 110,000 calls going up against this. What is it? 6,000 contracts I saw. So from a delta point of view, it's looking kind of delta neutrally, and wanting Baba to make the big move back to 120 because. We are in a bull market and stocks just go up. I thought they were, not a bad way. Vol's not too expensive. So at the rate Alibaba moves. Now, another play could be as well, there's some lockup stock that came available Friday. Hasn't done much. I think the stock's in right around the same place because I think Alibaba rallied $2 Friday. So, it could be a play on some movement in the future, but they're definitely looking for the thing to move, in order to make this trade worth it, at least 10 handles by January, one way or the other. It's got to move pretty good.
Yeah, I'm looking here at the chart while we're talking here. You got to love Baba's high exactly 120, not 120.01, not 119.99, exactly 120. You don't see that very often. So, fulfilling some technical analysis dreams there on that level, certainly. All right, interesting stuff. A lot of pretty much a similar theme across the board here in today's odd block. But listeners, hopefully you found some interesting things that you could use for your own trading, maybe some ideas, maybe some interesting inspiration, what to do, what not to do. Certainly a lot of that these days in the old odd block as well. Meantime, we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you guys know the drill by now. This is indeed the Express Block, the portion of the show where the Viceroy dons one of his many fancy caps and proceeds to take us behind the scenes into the land known as Options Express by Charles Schwab. What are the clients trading? What is the trading desk up to? What kind of questions are they getting? What kind of volume and activity are they seeing? What kind of new tools are coming down the pike? All sorts of cool stuff lay in store for us. So, Mr. Viceroy, the floor is yours, sir. Where shall our tour go today?
Another new tool that's being rolled out now, and I know some OX customers have it already and have used it. But if you're not seeing it, let us know and we'll turn it on for you. But today I'm going to talk about my other new. I need to do this carefully because I know last show I talked about my Janet Yellen poster and got a lot of email on that. I'm going to talk about the other new woman in my life today. I'm going to talk about Iris. Now, Iris is a brand new tool here at OX. It stands for Integrated Rapid Information System. And when you log on to your account, you'll see in the upper right-hand corner, if you're Iris enabled already, a little icon that looks like the iris of an eye. And what Iris is a central notification tool that we're rolling out here at OX. So I know I've used a lot of ambiguous terms. Let me talk about rubber hits the road, what it means. Iris is a place you can go during the trading day. If you're busy, you're looking at trades, you're looking at streaming charts, you're trying to generate a new idea. Iris is a central information resource. And what it has in there, it will have your account information, your trade information. If there's a stock in your account and it's got earnings coming due, you can see it in Iris. You can get updates in terms of new tools and new features here on the site. So I've been remiss in the fact that I haven't talked about it sooner, but the rollout is not 100% complete. So some folks will see it, some folks will see it shortly. If for any reason you're not seeing that iris in the upper right-hand portion of the screen when you log in, call the help desk and we'll turn you on. We're anxious to get people onto it, but it's an innovative notification system created to provide you with the trade alerts, the trade updates, the earnings, all the information you need during the day. And the nice thing about having it all in one place, it means you don't have to navigate away. If during the trading day you've got a position on and you're saying to yourself, when does that go X? When are the earnings due? You can drop into Iris and it'll be there for you. So please visit Iris. Again, it's the Integrated Rapid Information System. When you log on, you need to be logged in, you need to be a customer. But when you log on, in the upper right-hand corner of your screen, you'll see the thing that looks like the iris portion of an eye. Click on it, set it up so you can customize the sounds you want, how you want the alerts to come to you. But spend some time and visit Iris.
Good stuff, as always. Love the little clever names you guys give to those tools over there at OX. So check it out, listeners, if you haven't done so already. Alex always talking about the walk limits and talking about the Idea Hub and all the other cool tools they have available for you guys who use the OX platform. And if you're not using it yet, what are you waiting for? Surf on over to optionsexpress.com. Check it out for yourself. Kick the tires. Set up a free trading account. You can check out some of these tools on the paper trading side for yourself and then see if you like it and then upgrade to a paid account. Whatever path works for you. Meanwhile, our path is going to keep us rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, guys, I know it's been a while since Uncle Mike has been on his southern sojourn, so you may not be familiar with what it is we do in this segment, but this is, of course, the strategy block, the portion of the show where we break down some interesting trading ideas and strategies and explain how you, too, can utilize them in your own trading portfolios. And like I said, he's back from a long holiday. He's rested. He's relaxed. He's mercifully free of any sort of lingering complications that you can sometimes get when you travel south of the border. So he's raring and ready to go. Uncle Mike, I have the feeling my minions, they've kind of been off this week as well, so I don't have a lot of that was whispering in my ear this week. I have to rely on the old birdies, who we know they're not as good. But I've been hearing some info about maybe you're thinking you're leaning towards something that embodies the spirit of the season, perhaps some sort of holiday wish list or like a 12 days of Christmas kind of thing. Let me know if I should give the birdies their bird seed this week.
I'd give them their annual bird seed bonus.
Oh, they earned it, did they?
They did good. The birds even fly south of the border to check on me when I'm diligently working every moment of my vacation and avoiding the family. No, just kidding. But the birds and I have been in touch. So with that, what I want to do today are, in the theme of the holiday season, we're going to do the 12 days of Christmas, and I'm going to do the 12 trading rules. However, for your listening enjoyment, I am not going to sing, but I'll do my best. All right. On the first day of Christmas, Mike Tusaw said to me, "Don't sell naked calls." Now, of course, we have unlimited risk when selling naked calls, and we have a limited upside. However, I think there's an even deeper reason as to why I typically don't sell naked calls. Number one, you do have the unlimited risk. So let's say that XYZ stock all of a sudden does come out with a cure for cancer the next day, then, or something like that happens in XYZ stock, then yes, you do have that risk that's involved. But let's just look at it from a more everyday style of risk in terms of what you're actually getting. When you sell a naked call, you're bearish on a stock. And I think that there are better ways of being bearish than by selling a naked call. So if you're bearish on something with the typical move, and this is a very overgeneralized example, with the overgeneralized example with which I'm using, as the stock goes down, in theory, volatility will go higher. So the stock going down, the delta will be on your side with this. However, volatility will theoretically go higher and work against you as the stock is going down. Now, most of the time, delta is going to outweigh vega on such an issue, but I prefer to do something like maybe an out-of-the-money put calendar spread or something along those lines, as opposed to selling a naked call. There are times with which that you may want to consider it as part of like a greater in terms of as part of a spread, but then again, we're not naked when doing that. Hence the reason, on the first day of Christmas, Mike Tusaw said to me, "Don't sell naked calls." On the second day of Christmas, Mike Tusaw said to me, "Calendar spreads are never exact." Whenever you're buying a calendar spread, meaning that, for an example, you're buying a June at-the-money call and selling a near-term January at-the-money call, you might think, oh, okay, well, if I do the math on this, then all I got to do is buy this June call for $6, and then I'll sell this January call for $3. It's all at the money. Then at the end of February, I'll do the same thing in February, and then all of a sudden I've financed the entire calendar spread at the end of February. Not always the case. There's 6 factors of option pricing. You need to take a look at all of them. You need to make sure that you plan for all the different scenarios with which that can happen when doing a calendar spread. So it's not exact, because the following month volatility may be down and you may not be able to finance it after 2 months, and plus the stock might move enough to where you might not be able to finance it after 6 months, and you could lose all your money. And then on the first day of Christmas, don't sell naked calls. On the third day of Christmas, Mike Tusaw said to me, "True diversification is the way with which to look at your portfolio." What I often tell clients is, if you're in, I have a chart that I like to show people, or I like to just show people a chart of SPY overlay, or the S&P index overlaid with the S&P mid cap index overlaid with perhaps the small cap index. And you'll notice a lot of them go in a very similar direction. Now, some years one's more volatile than the other. And don't get me wrong, I think it makes sense at times to have exposure to all 3 of those risk categories: small cap, mid cap, and large cap. However, if that's what your diversification is, do you have any exposure to bonds? Do you have any exposure to commodities? Do you have any exposure to real estate outside the home you own? What other things do you have exposure to? And that's why I believe in true diversification, not just multiple stock indexes that do the same thing a lot of times. So on the second day of Christmas, Mike Tusaw said to me, "Calendars are never exact, and don't sell naked calls." On the fourth day of Christmas, Mike Tusaw said to me, "Don't let credit spreads go in the money. If you are selling a credit spread, meaning XYZ stock is at 50, and you sell the 45-40 put spread, If that's the case, then if you let that stock go down and go into the 44, 43 level, by doing that, you are asking for a lot of problems. And the reason is that the more it goes in the money, the more gamma works against you, and it's going to be more and more painful. Not only will the knife go in deeper, the more the stock goes against you, the knife begins to twist even more and more painfully. So on the fourth day of Christmas, Mike Tusaw said to me, don't let credit spreads go in the money. True diversification is the way to go. Calendars are never exact, and don't sell naked calls. On the fifth day of Christmas, Mike Tusaw said to me, risk management. So the reason I'm just going with that one is because I want to say it all fancy like they do in the song of the 5 golden rings. So I'm just going to say risk management. Don't let credit spreads go in the money. True diversification. Calendars are never exact, and don't sell naked calls. On the 6th day of Christmas, Mike Tusaw said to me, exit short puts or credit spreads at an 80% profit. So for example, XYZ stock is at $110 a share, and you sell the 100 put. As soon as that 100 put goes to 20 cents, the rule that I like to use is to get out. Once you get that much profit, it's like you are trying to squeeze blood from a turnip, so to speak, when you're trying to eke out those last 20 cents. And my general rule is 80% of the profit, get out. Same would hold true if I were doing a credit spread. And then risk management, don't let credit spreads go in the money. True diversification, calendars are never exact, and don't sell naked calls. On the 7th day of Christmas, Mike Tusaw said to me, watch out for dividends. Oftentimes we talk about on this show, we'd like to update you on the SPY going ex-dividend, and if you have an in-the-money call as part of a spread. If you have something along those lines, you need to be prepared for that. Because if you get assigned on your short calls, you're going to be short stock if you're either naked a short call, which, by the way, I have said not to do, or if it's part of a spread. And if you're short the stock, you will be paying that dividend if you get assigned on the date you don't want to get assigned. So watch out for dividends. Exit short puts or credit spreads at 80% profit. Risk management. Don't let credit spreads go in the money. True diversification. Calendars are never exact. And don't sell naked calls. On the 8th day of Christmas, Mike Tusaw said to me, remember Roe when it comes back. We basically have no interest rates right now. But once interest rates do come back at some point in time, with which they might, remember, you're going to have to factor in Roe as a factor in option pricing. Now, due to the fact that we have all 12 days of Christmas with which we want to explain right now, I don't want to get into an extensive conversation on Roe for the time being, but it is a factor. The general concept of Roe is that, let's say that XYZ stock, I buy the call option on XYZ stock, I pay $100 for it. And a month later, I sell it for $100 again. And let's just assume no commissions for sake of simplicity. Well, with that, you might look at that as a break-even trade. The reason you would look at that is because, well, I started with $100, I ended with $100. However, in reality, you could have put that $100 into a risk-free government treasury. At this stage, risk-free government treasuries, and the reason I say risk-free is because, quite frankly, if the U.S. government doesn't pay their bills, or if the U.S. government doesn't pay off on the treasuries, we got a whole lot bigger problems than your trading account, quite frankly. But in the quote-unquote risk-free government treasury, you could have earned some interest on that $100 during that time, with which you wasted it in a call that did absolutely nothing. Now, at this stage, it's a non-issue because the government treasuries are paying next to nothing. However, when it comes back, that will be a factor, and it's something with which you need to look out for. Watch out for dividends. Exit short puts or credit spreads at 80% profit. Risk management. Don't let credit spreads go in the money. True diversification. Calendars are never exact. And don't sell naked calls. On the 9th day of Christmas, Mike Tusaw said to me, understand synthetics. One way with which I tell people to find out if any financial advisor understands options or is just faking it is to ask them, well, do you sell covered calls? And most financial advisors who do anything with options will tell you something about how they do covered calls. And then ask them, well, do you sell short puts? And then if they say to you, oh, I don't sell short puts because that's way too risky, I only do covered calls. grab your wallet as tightly as you can and sprint out of that office as fast as you can. That is the test that's the first level of a test in terms of understanding if a financial advisor really understands options or not. With that being said, oftentimes, if you don't understand synthetics, you might run into a scenario to where you are looking to perhaps do some type of a conversion or a reversal to where you're saying, wow, those short calls are really low priced. So I'm going to short the stock, sell a put to do an upside down covered call basically, and then buy a call, and then I have a guaranteed profit. Well, you need to understand the synthetics, and you also need to watch out for the dividend in that scenario to have a true understanding of why things happen the way with which they do. Why a credit spread in theory is the same as a debit spread if the strikes are aligned right. A lot of those things you need to have an understanding as to what works best for you. Remember, when it comes back, watch out for dividends, exit short puts and credit spreads at 80% profit, risk management. Don't let credit spreads go in the money, true diversification, calendars are never exact, and don't sell naked calls. On the 10th day of Christmas, Mike Tusaw said to me, theta is never linear. Let's say that you have two options. You have one option that expires in 90 days and another option that one option that expires in 100 days, one option that expires in 3 days. Well, between today and tomorrow, the option that expires in 100 days is going to lose 1% of its time value. However, the option that expires in 3 days is going to lose a third of its time value. The reason is that it's going to lose a third of its time versus 1% of its time. So the closer you get to expiration, the more of a factor time decay plays. Have an understanding of that whenever you are selling or buying options for that matter, along with the other things with which we've talked about in terms of the option pricing model. Understand synthetics. Remember when it comes back. Watch out for dividends. Exit short puts or credit spreads at 80% profit. Risk management. Don't let credit spreads go in the money. True diversification. Calendars are never exact. And don't sell naked calls. On the 11th day of Christmas, Mike Tusaw said to me, butterflies never expire at the body. Meaning, if you are looking at a butterfly, for example, just either an iron butterfly or a traditional butterfly, or an all-call or all-put butterfly, I should say, and XYZ stock is at 50 and you are in the 40, 50, 60 butterfly, whether it's all calls, all puts, or you set up an iron butterfly. I shouldn't say never, but I have yet to see one expire, or I've never been in one that expires right at 50. So when you see that 10-to-1 risk reward, meaning, wow, for only $1, I have the chance to make $9. When you see that, don't do it. Based on that, have an exit plan before expiration and have an understanding that it's probably not going to be exact and be pinned right at that exact level. Theta is not linear. Understand synthetics. Remember, when it comes back, watch out for dividends. Exit short puts on credit spreads at 80% profit. Risk management. Don't let credit spreads go in the money. True diversification. Calendars are never exact. And don't sell naked calls. On the 12th day of Christmas, Mike Tusaw said to me, listen to your elders. Guys, I've been at this for over 10 years right now, pretty much more than 10 years. Pretty much my whole adult life after football has been involved in trading options in one way, shape, or form. And to this day, I still seek new knowledge whenever I possibly can. True story, a couple months ago, something happened. I saw something happen in an option to a client. Don't want to get into the details on the show. I had a lot of long conversations with Alex. It wasn't a trade that I had put the client in. He was a self-directed trader, and just something happened in regard to settlement. I had long conversations with Alex. Alex is someone who I consider a mentor of mine, and that's just one example. I would also call Andrew in a similar situation if need be. And Mark or Mark, either Mark, whatever the case may be, we talk to each other. We're in this together. And if you have other people with whom you can have a support network to help you, such as the Marks, such as Mark or Andrew, I would highly recommend doing it. If you don't, you're being foolish if you try to figure something out completely by yourself. Butterflies never expire at the body. Theta is not linear. Understand synthetics. Remember, when it comes back, watch out for dividends. Exit short puts and credit spreads at 80% profit. Risk management. Don't let credit spreads go in the money. True diversification. Calendars are never exact. And don't sell naked calls. That's all I got for today.
Wow, that's all I can say to that is wow, sir. That was truly an epic strategy block. You really came back rested and ready to go for that one. That was impressive. So well done, sir. Very, very good stuff. Off the cuff too. Crazy. Well done, sir. Well done. I think all I can say to that is it's time for us to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And he was singing to boot, listener. So that was all kinds of crazy. Still reeling from that epic strategy block. But it's time for us to keep on rolling into our final segment. Yes, it is indeed a time for Around the Block portion of the show. We tell you what we're watching for the rest of this week. And it is a bit of a weird week this week. First off, because we have no show. Secondly, because it is a truncated holiday week. As you mentioned at the top of the show, it seems like they're already starting to suck that holiday right out of those options out there. So bear that in mind if you're a premium buyer or a premium seller, relevant to all sides of the fence, and barring some dramatic shifts in the marketplace in the next couple of days, it's probably going to be par for the course for the rest of the week. So bear that in mind if you're blasting out premium at one Wednesday afternoon. You may not be selling it at optimal levels, so especially if they're hitting it already here on Monday afternoon. But Mr. Andrew, if you can still speak after that epic strategy block, what are you watching for the rest of this truncated holiday week, sir?
I don't know how you follow that up. Now I'll bet you.
Try some singing. That might do it.
When Tucson was in Mexico, he's got a couple of margaritas. He started penning that thing. The first dig. He started putting it all together. I don't know.
You're saying that's the result of some south of the border beverages, eh?
Just speculative.
What's scary is that was all done from the time that Mark IM'd me saying we need to fill a little bit more time today. So if you can make a longer strategy block, and that's what it came about.
I'm gonna send you that IM more often. See what you can cook up over there.
Oh my gosh,
that scared me. I scared myself as I was saying it.
Well, you know what? After you do all this, teaching and advising stuff, and just all this stuff is in your head, and it just came pouring out a fountain.
It's a good strategy block when it scares you as you're doing it. That's a sign of a good one, I think.
Yeah, I wasn't planning on singing. It just kind of happened.
Well, I got Sebastian every day singing in our chat room and our pit reports and stuff, and I'll tell you, you requited yourself well relative to the sweet sounds of Mark Sebastian did it. But thankfully the clients still come back. I guess they're gluttons for punishment. As far as Around the Block, what are we watching? I'm looking at VIX possibly trading 14 at the end of this week. Remember VIX is looking 30 days ahead. At the money vol was 13.5. It was a subject in our chat room this morning. I'm like, well, I'll bet you can go lower without too much trouble. That at the money vol low was around 8.5 this year, if you can believe that, which means when I looked at it this morning, it had a full 5 handles to drop if it really went to zero, essentially, which I think is going to be tough, but it's possible as far as that goes. So we could see vol drop a little more. The only thing, you got these Greek elections again. Are they going to, vote in a bunch of commies and kind of try to ruin the euro again? That is a possibility. We have some Greek clients, so they're just keeping us up to date on that because they still haven't really loosened up enough of the labor laws over there to kind of make that economy, I think, move. But I think, as far as that goes, there's not much earnings left besides a bunch of fund managers not thinking we could make any money this year. And I think the SPX is up, another 10% or more. So we were I think we had a closing high though today, I believe. I think we had an intraday high a few weeks ago, but I think we have a closing high today. So just a small 100 handles over since Wednesday of last week. Not too bad. 20 handles a day is all we ask. And I think, Alex, 20, if not 2,100 by the end of 2014, somewhere in the middle of January 2015.
All right. And since he invoked you, Mr. Alex, what are you watching for the rest of this holiday week, sir?
First of all, I've got to say that the entire row at Options Express here, we stood up and cheered for Mike, and those people who still carried lighters were lighting their lighters. So that was and we give this show away. We should charge for this wisdom.
I know.
What are we looking at? Markets are thin. There's a lot of end of year stuff going on. There's still going to be some tax selling. There's going to be minimum withdrawal selling in IRAs. I don't think any of that's going to stop us. I think with thin markets, any kind of rally here takes us through 18,000 on the Dow, 2,100 on the S&P. I think we could see VIX in the 13s in this last week, in this Janet Yellen rally. But the little asterisk that's up there, as Andrew pointed out, is geopolitical. A retail bank failed in Russia this morning, and there's lots of stuff going on geopolitically in the world. Putin just worries me. He's a nutcase, and he's getting painted into a corner here. So geopolitical concerns are always a problem. 10-year 216, I think holding 2 would be healthy. I think trading below 2 means the U.S. market will do well, but it means the rest of the world is suffering. And it's kind of the stuff we're looking at.
And Uncle Mike, if you have any voice left, take us home, sir. What are you watching for the rest of this week?
A voice, but just for the most part, just watching the numbers, like what Alex alluded to. Want to see if we can cross that the 2,100 mark on the S&P. I mean, we could easily do that tomorrow based on some of the days with which we've been having. So looking at that, and then just looking to see also if the traditional Santa Claus rally holds true for the last few days of the year. And that's pretty much it. It's all about the numbers right now.
All right, and that's pretty much it for this extended epic holiday show here of the Option Block. I told you, listeners, we weren't going to do 2 shows this week, but we made sure we made up for it with one epic mega strategy block spectacular. So in light of that, Uncle Mike, I will give you pride of place, sir. Give our listeners a little bit of a sneak peek of what's coming down the pike over there in the land of RCM Wealth Advisors.
Sneak peek for next year, what we are looking to do, we're getting it all together right now, financial planning and option traders perspective. It's going to be an educational series with which we're bringing out. So we'll have more information on that as the new year comes. But in the meantime, I'd like to wish everybody the best and enjoy your families in this holiday season.
And Mr. Alex, what's coming up in the land of OX?
The machine here never sleeps. We do education through the holidays. I'll just showcase a couple of events. Next Monday, the 29th, Nina's going to do a review of the trading platform and the new features on the site. And then the evening of the 29th, I'm going to do an iron spreads, predominantly iron condor. Going to do that at 8 o'clock Central Time. I do a handful of those every year for our international customers. Regrettably, Idea Hub is not available outside of the United States to both the Schwab community and the OX community. So I do a couple evening. I do them in kind of a flurry. But I'm doing one at 8 p.m. on the 29th. I'm doing another one at 7 p.m. on the 30th. Again, iron spreads. Also on the 30th, Nina is going to do part of her continuing education series. She's going to showcase put selling.
I like it. I think that will get a lot of people interested because at the end of the day, people like to write them some premiums. Bear in mind, you need to go by Uncle Mike's 12 rules of holiday options trading. All right, and that's going to bring to an end this epic episode of the Option Block. And on behalf of the Viceroy and the Rock Lobster, actually, no, I forgot the Rock Lobster. Here I am, wrapping it up too soon. All right, and Mr. Rock Lobster, what's coming down the pike in the land of the pit?
That is an excellent question. We will be offering new courses every month. Kind of the one subject course has been popular. So basically a lot of people come in and buying them. Then they like us so much they stick around. And so we will be doing a new suite of those on, subjects like put selling. We'll also be doing advanced subjects this year on, short time spreads, short diagonals, advanced vol trading and stuff like that for people to want to learn how to hedge, want to manage positions and all that kind of stuff. So but there'll be more digestible, 4 to 5 hour courses over the course of, let's say, 2 days, bang, bang, for busy people. And I want to block that time out. So you will see more of that from us in 2015. But for the rest of the week, we are kind of winding down here and trying to rest and get ready for what we hope will be a great 2015.
Sounds good. And on behalf of the Rock Lobster and the Viceroy and the epic Uncle Mike Tusaw, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program. Have a great rest of this holiday season. We will be back for one more show before the new year, so don't worry, we're not done yet. But we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.